So I saved this meme from the 2023 resolutions, which says we're gonna crash the economy to save the economy. And Michael Burry seems to agree with this. And he's talking about inflation, that it has peaked, that in the second half of 2023, we could potentially have a negative CPI, negative inflation, and then the Fed might cut rates, and then the cycle starts again and again and again. And he said it's not hard at all. Now I'm gonna comment on this in a little bit and actually talk about some trade ideas that I believe Michael Burry is doing around this subject. And again, we might find this out in his 13F filing, maybe not this one, the next one, but I have some ideas of how Michael Burry might be actually playing this thing, and I'm gonna share some of those ideas today. Now this thesis over here actually aligns a lot with what I talked about in my videos before when I said the final stage, the market is entering its final stage and a buying opportunity is near. Now funny enough, this is one of my most hated videos, one of my most disliked videos. Why? Because I was doing market crash videos for 2022 and everything I talked about was pretty much in line with reality. Everything was true, there was no doom and gloom, there was no drama, everything was happening right on. And a lot of the perma bears were actually following my channel. Now, whenever I talked about some type of hope that we're getting close to the end and 2023 is the year where we end it, I got such negative feedback like I could not imagine. People told me this is a 100-year crash. We are very far from any kind of a bottom. The bottom is not in 2023, it's in 2025, and all type of things. Now you have to remember something, that as investors get very, very optimistic in 2021 and we had a lot of euphoria, the same thing works on the downside and people get too bearish, they want the world to end, they want the great reset, they want something worse than the 2008 financial crisis, and then they keep waiting on buying stocks, we keep going down on the S&P, they say I'm gonna buy next, I'm gonna buy next, and they pretty much never get to buy in. And I believe Michael Burry actually, agrees with this whole thing, that this is not the end of the world, this is not, a Great Depression, it's not like the market will never recover, it's not like the Fed is never going to do any type of stimulus again. It's coming, and it's coming in the second half of 2023, in Michael Burry's opinion. And I tend to agree with whatever he said in this tweet, but I don't believe that we could actually have possibly a negative CPI for inflation in 2023. I'm just really not seeing it, in my opinion. I don't believe it's, that easy to just go from positive to negative. But it's possible, and a lot of people were talking about this, that inflation might shoot down to the downside, and this might push the Fed to do some stimulus, and then after that we might start recovering in the S&P 500. Now this tweet also aligns with a video I made on Michael Burry, on why I believe Michael Burry might be going long bonds in 2023, and I basically talked about this chart over here, and this is in the white line, this is the US government bond, which is the 10-year, and then I talked about the federal funds rate, which is the yellow or orange line, whatever you want to call it. So this is the line, and as you can see, whenever the Fed funds rate goes up, this is typically when the bonds peak. They peak whenever like what happened here in 2006, 2007, the bond yields peaked whenever the Fed funds actually peaked. And the same thing happened over here. So I'm looking at this for a potential indicator of when should I be buying bonds? When should I be buying bond ETFs like TLT, which TLT has one of its worst year pretty much in human history, is trading around 2011 type of lows. It's pretty much ridiculous. And if you look at any kind of upside potential, it could be huge, especially if we do potentially have negative inflation like what Michael Burry is talking about. But we can see this over here. Whenever the Fed funds starts going down here in the yellow line, look what happens in the 10-year. It starts going down, which means bonds do start appreciating. Same thing over here. Whenever the Fed start cutting rates, this is when bond peaks, whenever the Fed funds peak, and then it starts going down. So I'm looking at this chart for some type of indicator of when should I start buying bonds. And I'm still holding on, and maybe I should have started buying already, and maybe I'm just trying to be too patient with this one and trying to just time the bottom, and I might miss the bottom trying to do that. But I believe it's coming. February might be the last rate hike for the Federal Reserve if we do have lower CPI numbers for January and February. And if this is the last one in February, then sometime in the first, quarter of 2023, it could be an amazing time to actually buy some of those bonds, maybe the 10-year or maybe the 30-year, which is the TLT or the IEF type of ETF. Now, there's something else that I'm speculating that Michael Burry might be doing to play this whole thesis of, inflation, is going to spike again in, 2024 after we cut rates and we stimulate and stuff. What I believe Michael Burry could be playing potentially is actually also something on gold, and especially the gold miners ETF. And here I'm looking at the GDX on the candlestick line, and then the other line is again the federal funds rate. Now, I don't have a long history of the gold miners ETF, which is why it's a very short-dated type of chart. But you could look here at the correlation, which is negative. Sometimes it's positive over here, but over here down in the blue, it's showing the correlation between the gold miners ETF and the federal funds rate. So whenever the Fed is actually cutting rates and the federal funds rate is going down, most likely gold is going to make a very big move. Why? Because whenever the Fed cut rates, it depreciates the dollar, and whenever the dollar depreciates, everything else goes up, including the stock market and especially the gold market. But the reason I'm very bullish on gold, not just for the next year, but for the next years and years to come, the main reason I'm doing that is if Michael Burry is actually right and the Fed does, stimulate and inflation does come back massively in 2024, the Fed is going to lose all of its credibility. And I believe this is the only thing that golds need to make a very big move. Those type of stocks are one of the cheapest on historical metrics, the gold miners, even though their expenses are up. But again, in terms of the gold terms, I believe they are still very, very cheap. Although they made around a 35% rally from the bottom, I still believe these stocks are extremely, extremely cheap. And I believe Michael Burry could actually be doing that if he actually believes that inflation is going to be negative, is going to come back in 2024. This is a perfect scenario for gold only if we don't have a credit event in 2023. If we do have a credit event and something really bad happens in terms of credit, a lot of investors will be forced to liquidate their holdings to pay back, on margin and stuff, and they're going to be selling gold, and gold is not going to perform in 2023. It could be pushed into 2024. But I believe Michael Burry might be actually buying bonds after he shorted them in 2022, and I was also short bonds in 2022, and I'm looking to buy them sometime here soon, maybe in the first quarter of 2023. And I believe he could be also potentially buying gold, as this is a massive bet on the Fed losing credibility after they cut rates and then they stimulate and inflation goes back up. So this was my short video for today. I hope you got some ideas and I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. I hope to see you in another video.